My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Chicago wheat and corn. I'll start with Chicago wheat. The double top formed over late April, mid-May has seen, late last week and early this week, the targets reached on the downside just about. This double top has been the main driver for the market heading lower, especially Thursday last week, when prices dropped down through the middle time, currently 7.33 of the December 2020 to late March 2021 bullish Andrews pitchfork. This middle time had been supportive of the market on numerous attempts lower since the 3-day bearish evening star pattern back in late April. That made up one of the spikes of the double top formation. Most recently, the market had been held up by the January high at 693 either side of last weekend, but then broke down through it on Wednesday this week. The drop since has now seemingly started to halt at the next level of support, and that's from the 50% absolute Fibonacci line at 675 and lower. There are a number of nearby support levels which I will shortly detail, but please bear in mind this market is now entering a congestion zone from January to March this year between roughly 636 and 675. Within this we obviously have the 50% absolute Fibonacci line, but also the 50% Fibonacci lines for the 2020-2015 move at 670 and the recent move at 668, plus the short medium moving average currently at 668, the medium moving average currently 662, and of course the lower time currently 646, and that's of the same bullish Andrews pitchfork mentioned earlier. This is of course does not mention individually congestion levels and lesser Fibonacci levels, as I would be here a lot longer than either of us would want to be reading them out. Needless to say, the market is now entering an important zone, and it'll be interesting to see if the bearish incentive that's recently formed is enough to drive prices lower, or we start looking at the lower time as a bullish rolling support, which it's always been, but really looking at it as a bullish rolling support. Overall, it is a little too early, but it is not too early to start thinking about a possible pullback up from the fall of the double top. So if you start from the beginning of the congestions, then it would stretch up to about the 706 area. If it should start from the lower time, then we might see a pullback up only to 691, that area. This is all hypothetical right now, but it's worth remembering just in case. Chicago corn. The peak of the market early last week and late the last week before have seen a drop that has obviously been not been helped by the changeover last weekend. It's one of the occasional strictures under which I work of having big gaps in the market at change time, because I follow continuous charts. In this case between 641 and 572, though I actually have seen worse in Paris rapeseed, and especially recently in Paris millingweed, that has since been filled. Anyway, the drop has slowed down this week in between the short medium moving average overhead currently at 592 and the medium moving average below currently 564. Now, staying with the moving averages on the closing basis has been true, but the market has dipped lower but retreated back up pretty quickly. This has been due to the congestion early this year that made a bullish descending triangle and a bullish roof pattern, and which ultimately led to the sharp rise we saw in April and early May. Now, within that congestion are two uptrends. The August 2020 to date uptrend currently at 544, and the more recent 2021 uptrend currently at 537. One of these two may soon play a more significant role. This is because one of them may be the uptrend for a possible bearish bump and run reversal top pattern. Now, it is a bit too early to say which, if at all, but it would be a good way of explaining the nascent pullback up and what may happen next. You see, if it is a normal pullback up and away from the drop, then a move up to test the 600 area would be fine, maybe then making a new pattern after that. However, if it turns out to be part of a bearish bump and run reversal top, then we'd see a pullback up to similar levels, but then a turnaround back down and a possible fast move lower, especially if we move below the 520 level. Hence, it will be interesting to see how far the pullback goes and if the market stays pulled back. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.